What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day. We're going to have Tim Ord on today as well. Very much looking forward to that. I'm looking at some of my notifications here. Seems like Foot Locker. What is the deal with that, man? Look at that. 85% to the upside. Makes a strategic... Interesting. Not really sure what that's about. We'll take a look at that over the break. I just saw that number pop up. Seems like NetEase is up today, Digital Bridge, Regenicell. Again, this has been, this is one of those, if you're a biotech guy, ooh, man, you look for these kind of things, right? I mean, you're talking from $20, $25 up to $550, quite the movement up in Regenicell. How about that? You've seen a lot of short squeezes, actually, recently. Newegg is a really good example of this. Was it, you're 5.88% right now, but I mean, you're going from 332 all the way up to an 890 there. Same with this. This one's actually short squeeze trying to pop off right now. It's Finger Motion. Pretty not great company in any capacity, but you can see kind of... I found some of the forums that these guys talk about these things on, and I'm not someone who wants to play these at all, but I just find it interesting to see the drama unfold in those things. Take a look at the SPY, trading up 0.33% at 589.48. You have the composite off about 0.33% at 19,082 cents there. You get the Qs essentially flat right now. The AIQ also off 0.68% right there. Dow Jones Industrial trading up 0.57%. Those Russell futures trading up 0.42%. I mean, guys, this is not horrible price action at all things considered. You have the dollar coming off 0.07%, trading at 189. Take a look at Bitcoin. You're off 0.4%, but you've had some nice movement from the lows of today in Bitcoin. Crude oil coming back down off 2.17% at 61.78. Taking a look at gold contract. Getting a bid yet again on gold, okay? Looking at 3,227. Again, another very long wick on gold. And you're trading at 3,124. A lot of interesting signals going on price action-wise in this market. Taking a look at copper futures, trading up 0.75% at $4.68, with the silver futures trading up 0.54%. Take a look at your 10-year, trading at 4.45 on the yield. That's after a recent high of essentially 4.5. Take a look at the 30-year as well. That did crest 5% on the yield, trading 4.91% right now. Of course, PPI was a little bit cooler than anticipated, actually almost deflationary. Looks like essentially you have some guys just absorbing, okay, some of the tariffs into the margins, and whether or not that's because they believe it's transitional or whatever it might be, but that is positive to some certain extent, right? Of course, now we're discussing issues with supply shock. I mean, one of the things you can look at as well, okay, and if this is just kind of a one-time, I mean, it's not, you have to now at some certain point probably increase costs to get those margins up. If your business already has thin kind of margins, there is a potential that they're absorbing it into their margins in order to not, deplete demand, essentially. We'll see what happens. Again, this is what I was saying last month. There's a lot of discussion on what's going to happen with the tariffs, how it'll affect the market, and the only thing I really have to say to it is that we are going to find out. And this is some of the first bit of real data we have that kind of suggests what's going on with that. So it'll be interesting to see kind of what goes forward. There's been a lot of discussion online and big kind of pundits, I guess, as well, talking about, these yields are too high, right? And the bond market is indicating X, Y, and Z, okay? I actually don't necessarily think this bodes super negatively, okay? I think probably what's happening is I don't see rate cuts coming anytime soon. I think that the labor market is still strong. We've saw with GDP that people are still willing to purchase and can purchase quite a bit. You do have some credit card delinquencies going up, which of course is a problem, but you get a large, let's say large swath that's actually a small portion of the population is able to kind of spend out and keep this thing floating. Again, this is what we saw in 2022, right? I think this is kind of just repricing a little bit with the treasuries. Because you look at things, again, and I brought this up multiple times, but you look at things like the, junk corporates. This is risk on. This is people buying risk right now, If we were seeing some massive pump ups in the market and maybe something not similar in things like high yield bonds, then I would say, okay, this is a little bit spooky. Additionally, you have the USD Japanese yen going back the way you want it. There's liquidity in this market. Of course, you're going to have some kind of digestive period like you're having right now. The composite's all 0.33%, whatever. Look at this thing, right? So now I'm not necessarily champing at the bit right now to get into a bunch of equities. Of course, we do have some equity holdings and some, leveraged positions and things like Bitcoin. But, this is not necessarily indicating that you're just seeing retail pump it. I think initially that's what this is. That is what this was. Of course, you had a lot of the, fund managers and even hedge fund guys on the opposite side. And that's a lot of what these reports are saying. And it makes sense with some of the things that were leading to the upside. But as it stands, the demand for things, like AI and data centers, et cetera, seems to still be there. Of course, you have CoreWeave increasing capital expenditure, and they defend it by saying, hey, we're just trying to meet the demands of our clients, okay? So that's not a bad scene at all. You are going to increase the deficit here. And I think that's kind of really what's going on with your treasuries here. And I don't blame people holding it because, that's just how it's going to react, right? When you're just going to increase the debt even more. But what that kind of says is, hey, at least for the near term, we're going to continue to spend. There's going to be a lot of spending going on. And again, this is very different than what was kind of at least being spoken about early on in the administration, right? And now, of course, the ability to quickly switch and actually start paying off the debt and not adding to the deficit, probably couldn't have been done in such a short amount of time. But this is a change, right? And the idea is like, hey, there's gonna be more liquidity coming into this market. It seems like the demand is there. These big companies have plenty of cash to keep themselves floating, survive through COVID, etc. So why not just get back in? That's what I think the philosophy that's dominating here. Stay right there, folks. We'll be right back.